market structure is the best thing you can do for yourself as a trader, because this is the only way we make money in the financial markets. Yes, by simply taking trades following the direction of the prevailing trend. And on this video, I'll show you how simple it is so that you can do it for yourself and make money in the financial markets. There are two market structures that you will ever find in the financial markets. We have a trend reversal pattern and we have a trend continuation pattern. These two patterns are very important to know because this is the only thing that your trading chart will ever do. Nothing else. And yours is to know and master these things in order for you to make money in the financial markets consistently. Listen, forget about everything else that you heard somewhere right now and focus on what I'm saying, because this video will sure be a deliverance for someone. Now repeat after me and say, my trading charts will either go up or go down. If it goes up and down, that will be a trend reversal pattern. And your trading chart will either go up and go up. And if it goes up, and then everything else does in between, just forget about it and focus on your trading chart will either go up and go down. If it goes up and down, it's a trend reversal pattern, and your trading chart will either go up and go up. That will be a trend continuation pattern. There's no way under the sun your trading chart will ever produce anything else. I've been trading the markets for a while and I've never seen my trading charts doing anything else rather than one of these two things. Go to your charts right now and search what is happening. Come back later and comment this on the comment section below. What did you find on your trading charts? Any markets? Either you'll find this or you will find this. Simple. Stop complicating it. It's not that complicated. It's very complex, but it's not that complicated. Now that you know that your trading charts will either do this or this, and you can capitalize on either or for you to make money, yours is only to identify what your trading chart is doing so that you can capitalize on it and make money for yourself. And how do you identify the market structure? To identify the market structure, you simply have to know and master the market trends, which is also very simple to understand. There are 4 trend directions in the financial markets. Everyone else will tell you that there are 3 trend directions in the financial markets, and they are absolutely correct. Nothing wrong with what they are saying, but take it from me. There are 4 trend directions in the financial markets. This will be a deliverance for someone today. Someone will start profiting from these charts today because they finally know that there are 4 trend directions in the financial market, and they will start capitalizing on the 4th trend direction. They will start recognizing this 4th trend direction. They will start making money consistently because they just know that, wait a minute, whenever I see something like this, it's also a trend direction, and this is how I can capitalize on it. We have an uptrend, we have a downtrend, we have a consolidation trend, and we have a change of character. How to recognize an uptrend? The markets will be moving on the upside direction, creating higher highs and higher lows, which will look like something similar to this or this or this one on the real charts, depending on the markets that you are trading. Yes, it may not look as clear as it looks on that drafted example, but it's still not that hard to understand. I mean, you can still see the higher highs and higher lows. How to recognize a downtrend? The markets will be moving on the downside direction, creating lower highs and lower lows, which often looks something similar to this or this or this on a real price chart. The type of structure you find on the real price charts depends on the markets that you are trading. And when the market is neither making higher highs or higher lows, there's no clear direction of where it's going, we say this, the market is consolidating, meaning the market is taking a breather. The market takes a breather in a form of a consolidation for only two reasons. The most detrimental thing in the trading industry is that many beginner traders remain beginner traders even after 6-7 years because they are trying to make money trading what they don't understand. And there's no way that you can make money trading what you don't understand. So it's very important to know when the market is doing something, why is this doing it? What is taking place behind the scenes? So when you see things such as consolidation, you need to know why is this consolidating. Don't just be happy because you know that's okay, you have an uptrend, you have downtrend, you have a consolidation. Why is this consolidating? You need to be well informed. When the markets consolidate, it's because it wants to change the direction flow of the current trend. As you can see on this structure, the market was flowing on the downside direction, producing lower highs and lower lows. Then we saw an upcoming consolidation taking place, which attempted to break structure and change character, but failed. Then we saw the pattern of consolidation continuing for a little while before the market finally broke structure and changed the character. Eventually, the market flew to the opposite direction. And by taking a breather, it's simply just gathering enough strength to do so. For example, when you walk or run a long distance, you will finally reach your destination. When you reach your destination, you will be tired. When you get tired, you will start walking slowly, or you will just rest entirely before you come back. And this is the same thing that the market does. It runs to a particular direction, takes a breather, or starts walking slowly, and then comes back. Then we will say this is a trend reversal. Or on a different scenario, when you walk or run a long distance, you will run, get tired and rest, or start walking slowly for a while gathering enough strength to keep running again. Meaning you have not yet reached your destination, but you just got tired along the way and you needed strength to keep pushing further. And this will be a trend continuation. Then, if it's a trend reversal, the market will do this for the trend direction, which is called a change of character. It will produce a very big bearish candlestick that is fat and long enough to tell you that the sellers have entered the space and the market is turning direction, is changing the character from the upside to the downside direction, which often looks something similar to this on a real market chart, depending on the type of the markets you are trading, of course. But if you are trading indices, it usually looks something similar to this. As you can see for yourself, that these two structures are the pillar of everything you do on your charts. All the trend direction and everything else in between is centered around what is going on, whether this or this, nothing else. And if you want to make money, you just have to know and master these two things, which is something not hard to understand. I'm sure there's nothing hard to understand in everything that I have said so far. And if you agree, press this thumbs up button. When it comes to identifying whether the market is in an uptrend or downtrend, traders use tools such as trend lines, which is not an ideal solution in an index market because indices move a little more different than everything else you trade on your charts. Let's say we have an uptrend. As you can see for yourself, the price is moving to the upside direction, creating higher highs and higher lows. My higher highs or higher lows are not as smooth because this is the reality of things. You will not find them smooth at all on chart. And this is what will happen if you decide to draw a trend line. As you can see for yourself that we did not touch all the higher lows. Now the rule of a trend line says for the trend line to be correct, it must at least have 2 to 3 touches. And we have 1, 2, and 3 touches, meaning that the trend line is fine. Here's the second scenario that you will likely come across in your index chart if you are using a trend line. As you can see for yourself that the trend line was violated here. And most high lows did not even bother to touch the trend line. So this trend line trading strategy does not necessarily have much strength on indices. Meaning that if you are relying on tools such as trend lines to know or to see the market structure, you will most likely lose money most of the time. So the best thing that you can do for yourself is just know the market structure. In this structure, forget about all this. In this structure alone, when the market broke this trend line, this means that we are going to the opposite direction. So we are supposed to see the market falling, come for a retest and changing structure. But did the market fall? No. The market change structure? No. So you would have lost your money trading according to the trend line. Here is a real chart example of what I'm talking about. As you can see that, well, it was just a very huge fake out. Instead of looking at the trend lines, let's just focus on the market structure itself. This will be a high and a low. And this will be a higher high, a higher low, and then a higher high and a lower low, which does happen sometimes. I'm teaching you real market business here because these things of higher highs aligning and higher lows aligning and perfectly drawn out in these charts is not real. Okay, it's not real. This is what you will find mostly, and even more complicated than this. But this is not even complicated at all because I'm just telling you right now, relax and do as I tell you if you want to. Then after a lower low, we're expecting the market to make a higher low, which we didn't see happening. Because if the market makes this higher low now, it means that we are changing direction to the opposite trend. But all this did not happen, which means this is to keep you unprofitable because the market makers know that you are using tools such as trend line, which keeps you consistently unprofitable. So instead of using these tools and go with the market structure, as you can see that instead of going this direction, the market continued with what? A higher high and a higher low. Look at this again, a lower high. You can see very clearly that this low, this high is lower than the previous high, which is contradicting the structure. Yes, that's the realistic of it. The structure will be contradicted. All right. And you need to learn to move your way inside these contradictions. And here we have a higher low and another higher low, which never bothered to touch the trend line. Which means this was just one of those nonsense that the market makers usually do here and there to further confuse you. If you don't know what you are doing or you are not sure of what you are doing, so that you can lose this money trying to trade. Because at the end of the day, they must also make money, and they can only make money if you lose your money. So we call such things a market manipulation, and this is just a twinkie winky of it. There's a whole lot more that you will still see and learn, especially if you are journaling your trades. As soon as you start trading, make sure that you are journaling your trades. Find a trading journal. If you don't have this right now, go to the link on my description box and get yourself a trading journal, because what are you doing if you are not doing that? Instead of relying on charting tools such as trend lines, just simply know the market as you know yourself, and make sure that you are journaling your trades, because you will learn more from your trading charts if you do so.